Hi there, welcome to Kneppy Invests. In this third last standalone June quarter Appendix 4C video, I'll be taking a look at a company called MCS Security. Now, for full disclosure purposes, I am a shareholder of this company and have been a shareholder for about 4 or 5 years, and at this point in time, there's no reason for me to set up because I do think this is, or there is still some good value when it comes to this company. I would not qualify this company as being high quality. It's definitely not a high quality company, but sometimes the low quality companies can give you value and you can see some good returns from those sort of companies. In fact, Warren Buffett, when he started investing, actually started investing in low quality companies that were at good value. He then evolved into an investor that would buy into higher quality companies when he became a bit more mature in his investing life. But he started making a lot of money by investing in these sort of companies. So let's get into it and let's look at some facts in regards to this low quality company. The whole reason I regard MCS Security as a low quality company is simply because of what they do. Security, and I'm not talking about internet security, I'm talking about guard security and stuff like that. Now, when this company actually listed on the ASX, it was a backdoor listing. So before they were MCS Security, they actually were a mining company. Mining company weren't being successful, whatever they were doing, and MCS Security decided to backdoor list on the ASX in that way. And I still remember when the announcement came that this mining company was going to do a backdoor listing with a security company. My initial thoughts was it was going to be internet security, not physical security like MCS Security does. This company was founded in 2005 by Paul Simmons, who is also the CEO of the company, and it listed on the ASX in November 2016. And prior to that, again, it was a mining company. I'll say a mining exploring company because they weren't being quite successful with what they're doing. Now, around about 2014 to 2016, there was a flurry of backdoor listings on the ASX, and this was one of them. The CEO or founder is Paul Simmons, and he does have an 18% stake in this company, so there is a bit of skin in the game with Paul Simmons. Some of the other major shareholders includes Australian Ethical Investments, AEI, and HI Capital or something like that. They're the largest shareholder in this company. The market cap of MCS Security is only $12 million at 6.2 cents. In fact, when we look at the enterprise value, it's quite a bit lower than that because they have a little bit of cash on hand as well. And the ticker code for this company is not MCS, it's actually MSG or Madison Square Gardens. Why is guard security, that sort of a business model, why is that low quality sort of business? It all comes back to the competitors. So in this space, there's going to be a lot of competitors, and the margins in these sort of businesses, these industry, would be fairly low. Not a lot of barriers to entry. I wouldn't imagine it would take much capital to start a security company up. And when you do have a lot of competitors, you're going to see whenever there's contracts coming up, there will be a lot of bids. And the best bids will most likely be those who have the lowest cost for those who are putting the bids forward. And when you ever win a new contract like MCS Security does, more than likely they might have to employ a few more security guards. And labour is one of the biggest costs this company does have. So that's the main reasons I'll call this company low quality, just simply because the margins in this sort of business is really low. But there is potential we might see this company grow over the next 5 years because they're primarily based in WA. They are trying to expand into other states. In fact, I think they have expanded into South Australia. They are doing some covert guard security work, not guard work, security work. Covert security is just plain clothed security, more than likely looking for theft in stores, that sort of thing. I don't know. Anyway, let's have a look at the financial year 21 results for MCS Security. Revenue, $38.1 million. That's up 52% from the previous financial year. So this company is growing, and we'll have a look at their cash receipts over the past 5 or 6 years, and we can definitely see an uptrend in this company's receipts and new revenue. So this company is growing. Operating cash flow, 2.9 million, is up considerably from the previous year, 913%. Now that's off a low base, and if they increase their operating cash flow 913% from this year to next year, that would be substantial. So more than likely, we won't see that growth, that percentage growth anyway. And they are profitable, $1.6 million in profits. Again, that's up a fair bit from the previous year, up 392%. Gross profit margins at 18%. That has decreased a little bit over the past 5 years. If I remember correctly, it was about 21 or 22% 5 years ago, but fairly neutral or stable from the previous year. They have $4.7 million of net cash. Because they don't have any debt, that means their enterprise value is only $7.3 million, and that net cash is actually increasing because they are operational cash flow positive. So if they can maintain being operational cash flow positive, we're going to see the net cash increase, and if the share price doesn't increase, that enterprise value will come down. So that's one of the reasons why I do think this company is good value right now, because they are profitable, they are generating cash in their business, and if the share price doesn't come up, the value will actually get better from here on in. So I did calculate two valuation metrics: enterprise value to operating cash flow, which is my favorite valuation metrics, and that's 2.5. That's really, really low. And even the P ratio, 7.5. And the reason I prefer to use enterprise value is because when you're looking at the price to earnings, that earnings and the price is not really taking into account the fact that they are net cash by 4.7 million. So it's not really taking into account either the cash or the debt of the business. That's why I prefer to use enterprise value over, say, the market cap of a company. So just looking at those financial or valuation metrics, this company is still looking good value, even though share price has tripled in the past few years. And on the right here, I've just taken the profit and loss statement. We have seen the revenue increase from $25 million to $38 million in the past year. So the gross profit has increased by $2.3 million. And the most important thing here is that overheads haven't increased by all that much. They've only increased by $500,000. So this company has shown a little bit of scale in the past year, and that's why the profit in this company has increased by 392% because of that scale in their business. So if they can keep increasing their revenue, their cash receipts, and maintain a control on their overheads, this company will become more profitable over the next few years. Now, just going to have a look at the March quarter and the June quarter Appendix 4Cs, taking a look at the cash flow from operating activities to see how this company has been moving forward over the last 6 months. And in the March quarter, they had receipts and customers 10.1 million, and more importantly, operating cash flow of 1.1 million, even though they did pay $789,000 in GST. And because they don't spend a lot of money in financing, investing activities, it's almost zero, they actually increase their cash in the business by $1 million. So the operating cash flow goes down all the way to the bottom line. So finished the March quarter with $4 million. And that actually, this quarter did get me excited because $1 million of operating cash flow in one quarter does translate to $4 million in a year. You have to be careful that just because they were operational cash flow positive by $1 million in this one quarter doesn't mean you can translate that through the next 3 or 4 quarters and say it's $4 million for the year. But it was an exciting quarter. So let's have a look at the June quarter to see if the company had progressed even further from this quarter. There were some positives and some negatives when it comes to MCS Security's June quarter results. Receipts to customers actually increased $2.3 million from the March quarter to $12.5 million. However, the staff costs increased by a little bit more than the cash receipts, up $2.6 million. And because staff costs, or the costs in the business, actually grew at a greater rate than the receipts of customers, MCS Security were not as operational cash flow positive in the June quarter, only operational cash flow positive by $686,000. But again, because this company doesn't spend any money on financing investing activities, that went down to the bottom line, and they increased their cash on hand from $4 million to $4.7 million. Onto one of the most important things I do look at for all companies that do release Appendix 4Cs, and that is the cash receipts through history. I want to see an uptrend in this chart. Now, the cash receipts history for MCS Security goes back to December quarter 2015 here, and I just realized that on their website, so I actually did go to their website, they did say that they listed on the ASX in November 2016. I'm thinking they had the wrong year. It should have been November 2015. I did think November 2016 was a little bit late. And just going by this information, that the fact I've collated receipts history for this company going back to December quarter 2015 probably shows you that the company's website might be a little bit wrong. But the most important thing here is not that they are wrong in a little detail. It's the fact that the cash receipts have been growing through time. It even looks like it has been accelerating over the last few years, and that is the most important thing. And we know it's been accelerated because I did calculate the compound quarterly growth rate in receipts over this whole time period, over the past 3, 2, and 1 year. And since December 2015, receipts have grown at 4.7% per quarter. That's a nice per quarter rate of increase. But over the past 3 years, growing at 7.2%, 2 years at 6.2%, and the last year it's grown at 13.2%. So it does seem like the growth in cash receipts for this company has been expanding. And that's another reason to get slightly excited about this company, because if they can continue exponentially growing their receipts over the next few years, if they can expand a little bit more aggressively into the eastern states and South Australia, and I shouldn't discount Northern Territory either, this company does have that potential to be significantly larger in the future. And that's why I'm a little bit excited about this company, even though it is a low quality company, because it is only has an enterprise value of about $7 million, yet has the opportunity to grow at a fairly quick rate over the next 5 years. Onto the charts for MCS Security. We're going to look at two charts for this company. The first one is the weekly chart, and then we'll have a look at the daily chart in the next slide. With the weekly chart, I've gone back all the way to when they listed on the ASX or transitioned from that exploring mining company to a security company. And the share price back then when they listed or backdoored onto the ASX, the share price back then was around about 6 or 7 cents. And for the next 2 or 3 years, the market was not at all interested in this company. They knew it was a low quality company and no one was willing to buy into MCS Security until 2019, when the share price got down to a low of 1.2 cents. And around that time, with the share price of 1.2 cents, the market cap of this company was ridiculously low at $2 or $3 million. This is a company that was profitable, that also was generating cash in their business. I did take a position in MCS Security about 1 or 2 years before 2019, so I was actually seeing the share price drop, and I was actually thinking of buying more shares at that point in time. But the main story here is when you do see an increase in volume, that's telling you the market is getting a little bit excited about a company. And the market was seeing value in MCS Security at that point in time simply because of the market. So even though it is a low quality company, the market was seeing value there. And it did look like during 2019 and start of 2020, the share price was starting or trying to move into an uptrend. However, the COVID-19 financial panic put a bit of a stop, we'll say a temporary stop, to that new uptrend or potential new uptrend developing. And we actually saw the share price get to its all-time low at 0.9 cents, ridiculously low for a company, again, that was operational cash flow positive and more than likely wasn't going to lose much business in their operations. In fact, they didn't at all. And from that low in the COVID-19 financial panic, we've seen the share price move up. In fact, it's increased sixfold from 1 cent to 6.5 cents. And when we look at the daily chart, we'll see a definite breakout in the share price for this company around or centered on their October Appendix 4C that they released in 2020. The daily chart for MCS Security here goes back 2 years to August 2019, and around that time, There wasn't that much interest in this company, low liquidity, not a lot of trading in the company's shares. And that did affect the share price during the COVID-19 financial panic, where we did see the share price get down to a low of 0.9 cents. We didn't see a lot of volume during March of 2020. When you do look at charts of other companies on the ASX, you'll see a lot of volume, a lot of selling coming through that down period. But with MCS Security, no one really cared. No one really wanted to sell out. And those who did sell out, because of the lack of liquidity, did send the share price down to that share price low of 0.9 cents. And of course, during the recovery, just after that low, we did see the share price triple from 0.9 cents to about 2.7 cents. And then from June to October of 2020, share price really struggled to move anywhere until the company released their Appendix 4C on October 28. The share price increased 27% on the back of that, and that was a breakout in the share price because we did see some good volume coming in. And the reason the market liked that Appendix 4C was because they were operational cash flow positive by 800,000 and had increased their cash receipts. So this company was not being affected by COVID-19. And we have seen a share price increase from that breakout in the share price in October last year. Around that time, the share price was 3 cents. So share price has more than doubled in just under a year. That's a nice return in any company you do hold. And there is that potential we might see significant gains in the next 5 years if the company can continue their growth trajectories, expand into the other states, particularly in the eastern states. And if the company can succeed in doing those two things, we might see significantly higher value for this company. They've also stated in the past they want higher margin business. So more than likely, the higher margin business would not be physical security. It would be more of the non-physical security like CCTV cameras, that sort of thing. They have talked about that in the past. And if they do transition to those higher margin sort of revenue streams, that would be beneficial for this company in the long term and would actually also force a share price up. Only 2 more standalone Appendix 4C June quarter videos to go. And the last 2 are Mosaic Brands. I'm actually quite excited to talk about that company simply because I was an ex-shareholder of Mosaic Brands a year ago, and I was concerned because their current assets, or current liabilities would double their current assets. And the only reason or way that can work, apparently, I'm not an accountant, is if you have fairly quick turnover. And with the lockdowns in New South Wales and Victoria, I was a little bit concerned about Mosaic Brands because a lot of their stores were shut and the share price was tanking, so the market was concerned as well. However, they did do a capital raising because more than likely they were under stress, and we have actually seen the share price rebound. So the market is now less concerned about the future of Mosaic Brands because of this capital raising. Also excited to talk about Buddy. We have seen the share price of that company take a massive hit over the past year. In fact, they also did a capital raising, and then the share price fell well below the price of that capital raising. And then they released their Appendix 4C, and I was surprised to see they were operational cash flow positive for the June quarter. That's all I have for this financial year 21 results and June quarter Appendix 4C video for MCS Security. If you have any questions about this company or any other company on the ASX, I'd love to hear your opinion, your thoughts, or your questions, and leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.